Hey guys, let's go over probably one of the most misunderstood things about assuming a VA mortgage, and that is that an investor cannot assume a VA mortgage, which is actually not the case. Now, before we go into what that looks like and penciling out the math, a few things to be aware of is one, that the other two types of assumable mortgages, which are FHA and USDA, do not allow for investors to come in and take those. They have a very strict policy that if you're taking over their mortgage, you have to be living in that home as your primary residence. The VA, however, is really just geared towards helping veterans, and that's on the buy and the sale. And the reason that they allow assumptions to investors is because on the selling side, that helps you have a bigger pool of people who are willing to buy your house. And so if that helps you move on to the next chapter of your life, the VA says that's good enough for us, and they will allow it in most cases. Now, it is at the servicer discretion, so you will have to communicate with them directly. Something to be aware of on the selling side is if you do want to entertain selling to an investor, for example, your entitlement will be tied up, whether it's a veteran who's buying it or not, as the investor. So you do need to be comfortable with that amount of entitlement, not moving on to the next stage in your life. And in most cases, the VA has a pretty high county limit. So you should be able to comfortably purchase your next home without having to put anything down if you don't want to. Now, on the penciling math out, if you're on the selling side, let's say you have a $200,000 loan left, you're selling your house for $300,000, you have a 3% rate on your mortgage. The principal and interest would be $843. You may have had investors come and knock on your door and say, hey, I'm willing to pay you, let's say, $240,000 for that house. And the reason for that is because they're assuming whatever terms they have. Let's say they take out a 30-year mortgage at a 77% rate. Their principal and interest would also be $843. So what you could say is, hey, Mr. Investor, I'm selling it to you at a slightly higher price, but I'm going to let you assume my VA mortgage, take that super low interest, principal and interest payment, so that way you can have the cash flow that you're looking at from an investor mindset, and that justifies them paying over that $240,000 valuation that they had come up with, or get really, really close to the actual sales price on the home. So definitely a great thing to be aware of. You might actually have to proactively bring it up because, again, most people don't know that you can do that. And if you really want to be ahead of the game, just go ahead and call the servicer of your current VA mortgage. Let them know that's something you are entertaining doing, and they'll let you know if there's any other steps you should be aware of. So I hope that's helpful for some veteran sellers out there. If you have questions for your specific scenario, feel free to reach out. All my contact info is in the link below. Take care.